Okay, so I just made a video on capitulation. If you haven't watched that video, go and watch it. It's how to look for capitulation in the volume, which is basically trend reversal. Now we're going to be talking about trend continuation. Now, exhaustion's actually a little more difficult. There's easier setups. In fact, in some cases, it can be way easier than identifying capitulation, a trend reversal. But a lot of the cases, exhaustion can be hard to identify. But there's some specific setups that are very cookie cutter that I'm going to show you today. So, how do you know if a trend's going to hold up? Volume, my friends. I'm Teddy. If you enjoyed this video, please be sure to leave a like, subscribe. You're going to learn a lot today about reading volume. So why does this work? Why does reading volume work? So markets follow the money, okay? Now, understand, if I had a large position I was trying to accumulate and I needed shares, right? I needed sellers so I could buy those shares. I could do that at two places, right? I could either do it underneath support and take the stop losses of those buyers, or I could pay the resistance, right? I could buy my way up to a resistance level and buy up those sellers. So there's two ways I can do it. Depending on how bullish this scenario would be, is going to depend on whether you get a stop hunt or it's just moving, right? Here's a case where we just move. So markets follow the money. Imagine this, okay? Imagine you having about $1 million. Let's just imagine you had about $1 million every day to spend on market pricing, right? Just follow me for a second. Once you spend that amount of money, right, and you run out of money, if you were the one that was holding the market up, pushing it higher, when you stop buying, now just follow me. Obviously, it takes more than $1 million to move a very large market. Just follow me for a second, okay? If you're pushing the market up and money actually dries up, okay, you're going to see the market coast downwards, right? If the bias is still bullish. If the bias is still bullish, all that the trend is requiring is more money to be injected into it. You're going to see volume drop off on the pullback. Make sense? If the bias is still intact, you're going to see volume drop off on the pullback. Take a look at the picture here. See where I have marked with arrows and circles. Understand that. The high volume parts are actually force pushing the market up. Liquidity is pushing the market up, right? We have sellers. Those sellers are getting bought up, and it's pushing the market up. And what happens is maybe we run out of sellers. Make sense? Or maybe we run out of money to pay the sellers, right? And prices come down. Sellers maybe take profits, etc. And then we see price continuing higher on force again, right? Force being volume, interest, etc. That's how it works. It runs off liquidity. And we can identify the liquidity by seeing volume, sales actually being gone through, right? Now, level 2 is also a way you can do that, but looking at the actual sales gone through is much more reliable, because at level 2 you're going to encounter a lot of spoofs. Sometimes it's inaccurate, right? But when volume is actually printed, you can really take advantage when you analyze it, okay? So markets follow the money. If interest cares about higher prices, that's where the market's going to go. It's going to go to higher pricing, okay? And you're using liquidity to do that. And in an exhaustion scenario, it's force, and then you get a lack of force, and then force going up. Basically, a trend. Very simple trend, okay? So case study number 1, let's take a look at this apple here, okay? This is a very bullish scenario, okay? Look where I have circled, and look where I have kind of the curve, the white curve. The white curve in the volume identifies the exhaustion, okay? We see volume around November. If I'm using my mouse here, okay, we actually see volume coming in around here. Makes sense? When volume drops off, prices should actually be falling down. In this scenario, there is so few sellers available, right? We continue to hold pricing at higher prices, right? Volume actually drops off, but look at what happens here. Prices are actually holding. That's fairly bullish. And this is actually a more aggressive bullish exhaustion setup. That's more advanced. We're not going to talk about that in this video. The different kinds of exhaustion setups, how bullish, how bearish, etc. Just know that exhaustion is defensive. If the exhaustion is being defended well, what that means is you have the trend being sparked by the volume. The volume here should be defended. This is where the majority of the positions are, is in the volume here. This area here should be defended. We don't want to see price go below it. We kind of don't really want to see price go into it. A lot of times it is going to go into it, but the more strength that it has, the more bullish it is or the more bearish it is, the more it's going to stay away from this area. Makes sense? So this was actually a fairly bullish scenario. You see force pushing it up, volume pushing it up, volume draws down, you see a nice pullback, then you start seeing volume come back in, and we're pushing the market up. Okay, that's number 1 in the case study. Number 2, look at CrowdStrike. Look at this insanely strong trend. Okay, and you might see this volume here, this red bar. Pay attention to something. Okay, have we ever actually closed? Oh, let's go back here. Have we closed below this candle? This nice high volume red candle. Did we actually close below it? And even if so, answer is no. We didn't close below it. But even if we did close below it, was it immediately a rejection up? That's what matters, right? So we did get a lot of volume on this day, but chances are, right, those got taken advantage of immediately. And we actually see the major capitulation from them over here. That's more advanced, but long story short, we get force, exhaustion of force, then we see force coming back in the market, exhaustion of force, and then we get a very bullish setup here. Volume's low, we keep imbalancing up, there is no sellers in the market, and then we start seeing even more force come in the market once we find sellers, and they're absolutely getting bought up like crazy, right? That's that. So number 3, let's take a look at Meta. Now these are all bullish scenarios. Bearish would be the same thing, just the opposite, right, to the downside. So here we go. We get Meta. We get force pushing the market up. We get exhaustion of force, die down of interest until volume comes back in. So pay attention when volume comes back in on this bar here, right? On this bar here. We never really close below this bar, right? We never really close below this bar, right? We get force coming back in the market, and when we try to close above this elevated volume, we just get capitulation, pushing it back up to the upside, right? So we try and get some follow through for sellers. Doesn't happen, they get taken advantage of. And we get force pushing it back up, interest dies down, and we are still in a very supply deficient market because of the way that it is holding to the upside, okay? So Exhaustion's defensive. You're going to see force, resting of force, and then you'll see force coming back in the market. Okay? And that force to the upside is usually going to be because they're paying the ask. They want to buy that resistance, right? We can verify that because we have the volume. There are sellers there, right? Obviously, there's a buyer for every seller, so we know that there are sellers there. They want to pay those sellers. Makes sense? That's why it's bullish. Exhaustion is defensive. They're paying the ask or they're selling the bid, depending on if it's bearish exhaustion or bullish exhaustion. All the examples I've shown you so far are bullish exhaustion, but you can get the idea for a bearish a bearish scenario as well. It would just be the opposite. And exhaustion is just simply trend continuation, right? Force is keeping the market up. It's being defended. All the positions that are in the market are absolutely being defended. It's not like capitulation where the positions that are actually coming in the market are getting taken advantage of. It's not like that. The positions in the market are being defended, and every time you get there is some capitulation in the exhaustion trend, but it's towards the bottom. If we go back here, where are we at? Right. If we go back here and we get sellers coming in, those sellers actually capitulate, right? They change their bias. And so small amount of capitulation, but the capitulation is in terms of this short-term leg. But that's basically it. So look at this on GameStop. This was an exhaustion scenario that might be a little under the radar. People might see a large red bar like this and be like, oh, it's over. We're never going to see that pricing again, or et cetera, be freaked out by the sell-off. But actually, this was exhaustion. You see volume pushing it up to the upside. Then we get a die down of force, right? Then we get volume pushing it back up to the upside. And finally, we capitulate here on this bar is. So that's the thing. Do you know what this is with the arrow? If you look at my other video, you will understand clearly why this is capitulation and why we haven't gone over this pricing since, is because the buyers that were here got taken advantage of very quickly, and there was a complete bias change there, right? So that's basically it for exhaustion. Pretty simple. Look for those setups. It's a very easy setup to identify when you really see it, but they're far and few. Usually exhaustion struggles to be defended, or you see volume or you see exhaustion being defended kinda, and it's very weary. So it's best with this to stick to more cookie cutter setups, because exhaustion's kind of tricky. It's definitely not like capitulation. Capitulation is you can see it. With exhaustion, time is definitely a factor, right? Because you might actually have positions closing out over time, but that's a little bit more advanced. That's really it, though. I think if we actually look at this is GameStop. Look at this exhaustion. Get force pushing up. The amount of die down on this exhaustion here tells you all you need to know, right? The amount of drop off in the volume, and with the volume coming back in, that's an extremely bullish setup. This was when GameStop hit about $10, just had the absolute massive reaction that it deserved, and hoping to see that again. I would love to see that. But long story short, guys, that's it. Join the Discord if you want me to hear you, or if you want to hear me yell at you about your trading. Like and subscribe. Peace out, guys.